Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Bill Bailey, analyst with Nasdaq IR Intelligence, for an update on technicals and who is doing the buying. Bill, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me back.
All right, Bill, and let's take a look at who's been participating in the market.
Yes, definitely. So it's interesting because retail's back buying. We saw the crypto frenzy last week that we're all very aware of. They weren't just only buying that asset space, they were also buying equities in a large way, helping stocks get to the fresh highs that we saw them get to. It's interesting because we didn't see institutional participate very much just at first glance. That's kind of interesting because they've historically have been there every step of the way, pushing stocks into the fresh highs. But a deeper dive into the Nasdaq data shows that they were actually buying the tech space and in quite a large way. They were buying across all market cap sizes and so they were just really buying the tech space. And as we know, they're kind of a large component of the S&P and Nasdaq, both of those hitting the fresh highs. But the Russell 2000, the small cap space wasn't quite there with those two indices. So a lot of the tech buying really fueled the markets getting into the fresh high territory.
And Bill, let's talk more about the Russell 2000. It really has been the story this year with small cap rotation. How does market breadth in the Russell 2000 look following its strong start to the year?
So we're actually starting to see a little bit of softening there. It's pretty interesting because the S&P, on the flip side, had really good breadth last week. We saw over 70% stocks participate in that index to help push the stocks higher. We didn't see that in the Russell 2000, and that's also a big factor why that index didn't continue to make fresh highs. Then we also like to look at the 200-day moving average. It's important to see how many stocks within these indices are above the 200-day moving average. It's historically considered a pretty bullish indicator. So the idea being if more stocks are above the 200-day moving average, it encourages more institutional flow. For the first time in a long time with the small caps rallying, we started to see some softening there specifically. So below 80% is where we dropped. So that means 79% of the stocks in the Russell 2000 are above their 200-day moving average. Still not very alarming in the grand scheme of things, but it's quite a big significance when the S&P, we're seeing a roughly 96% of their stocks above the 200-day moving average. And it's more notable that that was a deterioration in the Russell 2000 versus the S&P.
And Bill, to wrap up here, what are you focused on moving forward?
So I'm really interested to see the Russell 2000 to see maybe if institutional comes back to participate. If they do that, then I think breadth will kind of work itself out, and the amount of stocks above the 200-day moving average will also work themselves out. That would be it's very important to keep an eye on the small caps because they historically have forecasted some softening in the markets. So I think we're kind of approaching the area where we might see some negative divergence there. And then the other thing we've talked about a few times, you and I on this segment, is the TLT trade with the Treasury bond ETF. I've been really looking there to see if that catches any type of bid. What that would tell me is that it's a defensive trade and people are getting a little more, a little worrisome about stocks in the near term. So the interesting thing there is, as I've been talking about that over the past few months with you, that was making fresh lows. We're finally starting to see that catch a bid. The last two lows it's made over the past few weeks have been higher. Just looks to be stabilizing. It's worth noting that we're still at the very bottom of a long downtrend. So I don't think it's like too alarming yet, but it's definitely worth putting on your radar if you think that's directly competing with dollars in the equity market. And we're starting to see some bidding there. So ultimately, the summary I think here is over the last couple of weeks that we're still seeing good things in the S&P 500, but there is some hesitation in the Russells and the small caps and some of the more defensive areas of the market, things we should always keep a little eye on.
All right, Bill, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.